Okay, this video is about workers' compensation and more specifically, what drives the majority of your workers' compensation cost. A lot of people think that workers' comp is a rate that's set by the state and there's not much wiggle room or not much they can do about it. And that is furthest from the truth. So in this video, I want to break down to you what actually drives the majority of your workers' compensation costs, and more importantly is what you can do to position yourself to really start impacting the overall cost that you pay for your insurance premiums. Now, one of the things is that a lot of people think that workers' comp costs are simply driven by the claims that they have on, a 5-year period of time. And the reality too is that's only part of the story. What actually drives your long-term costs when it comes to workers' comp is how those claims are managed once the injury actually happens. And what I'm referring to, and you've probably heard before, is something called return to work or light duty. And without a return to work or a light duty program, your insurance claims ultimately end up remaining open longer. The cost of the claim significantly increases, and it directly impacts how insurance underwriters are going to price your insurance business because they see you as a high risk. The companies that actually outperform others in the workers' compensation space, they all have one thing in common, and that is that they bring their employees back to work as soon as possible in some form or capacity, doing anything. I don't care if it's a job we made up, because what that does is it reduces the severity of the claim, it reduces the claim cost, but more importantly is it signals to the underwriters that this business knows how to manage workers' compensation claims. And when an underwriter sees that, it changes everything. It changes how they price your insurance, how they compete for your business, and how aggressive they're going to be able to get to try and win your account. And at the end of the day, that affects how much you're going to end up paying for your insurance premium. So one of the things you have to understand in Pennsylvania is the state's rate is a very small component to how much you're going to end up paying overall. If you understand this, in Pennsylvania, an insurance company can deviate the pricing on what you're going to pay for your premium as much as adding 25 points higher than the base rate or giving you up to 25 points off the base rate. Those are known as what's called scheduled credits or scheduled debits. And then on top of that, they can issue the policy under a variety of different issuing companies. Every one of those issuing companies has a different rate or a different markup to it. So this is a short video. I just wanted to explain that to you. If you want a deeper understanding as to why people take advantage of the workers' compensation system and why people abuse it and why your insurance companies are paying out claims that you sometimes question or you don't think are legitimate, I break all that down in a longer video you'll find somewhere below. And that gets into also, more importantly, is what you should be doing and how you should be putting some programs in place to stop the bleeding, no pun intended, on these workers' compensation claims just getting exorbitantly high, because at the end of the day, not only does it increase your costs, it makes you less desirable for anybody else willing to even look at you. So hopefully this helped. If you have any questions, my contact information is below. Reach out and we'll see you on the next one.